Interesting question, because the economic fundamentals have slowed, but they haven't given any sign that they're falling off a cliff. And while the equity markets are jumping out on the window ledges on Wall Street, the bond market is not. Yields have come down some, but if you look at both high yield and investment grade spreads, they're still very, very tight. So it's hard to say that a recession is baking itself into the cake. The New York Fed has a recession indicator that suggests that we're getting pretty close to recession, but we've also gotten false signals from that over the last couple of months. And last Friday, McKee Bowman of the Fed was noting that it's possible that the whole idea of yield curve inversion isn't working anymore for some reason. And we saw that with the yield curve inverted for 2.5 years and no recession. So it's hard to say that we're actually going to have a recession.
If somebody from the Trump administration were here, perhaps they'd say what Kevin Hassett of the National Economic Council said on CNBC earlier today. The second quarter will, quote, take off after tax cuts.
The second quarter is not going to take off after tax cuts, because tax cuts aren't going to happen until the third or fourth quarter. And that's another thing.
But the market can kind of lead right?
Yeah.
Expectations of something.
Everybody's talking about tax cuts. The basic part of the whole tax exercise this year is just to extend what we already have. And if they do that, which is got to be your base case scenario, because it's hard to finance the rest of it. If they do that, your paycheck's not going to change. I mean, it's not going to go up, which would be a tough thing for the economy, but it's not going to go down. You're not going to suddenly have all kinds of extra money to spend. So it's a little bit of a misleading debate. Now, if we stop taxing tips, that'll help a little bit on the margin, but tips basically are the lowest paid workers in America. And so they're not going to be adding that much to GDP. And seniors, if you don't tax Social Security, seniors don't spend as much. They're on fixed incomes. So it's hard to see tax reform, other than a psychological tailwind to the markets, really adding a lot.
How quickly can the U.S. economy go from okay to or signs of weakness to a recession?
Very quickly. And that's part of the problem that we have, is nobody can really call a recession. Yeah. The old joke about...
We're those guys who are like, hey...
The markets...
I believe they're referred to as eggheads.
Yeah. That'd be us. The markets have called like 7 of the last 3 recessions, I think, is the old joke. Because it's a confidence thing. It's when people lose confidence, and that's what's really hard to measure. We did get the consumer confidence numbers, and we'll get Michigan on Friday. And we did get a New York consumer confidence reading today that suggested that people are growing more concerned about their jobs and income prospects. But it's really a kind of a fast collapse that leads you into recession. And right now, that could happen. I'll go back to 2001 when George W. Bush took over. That was when we were just having the tech bubble burst. And he was immediately talking about, well, maybe we need to do some stimulus here to keep the economy from going into recession. And the question then was, could he be talking the economy into recession? And that may be where we are now, in that we're all talking about it. And then Americans out there who are listening to this program are saying, oh no, let's head for the bomb shelter.
Well, as Tim reminded me, and I was like, what? There's a Fed meeting next week, and we get a Fed decision. How does Jay Powell and the FOMC and the voting members take some of this market volatility, this Trump conversations and qualification of the economy, maybe this transition? Do they take that into account? And could we see some kind of rate move next week?
No rate move next week. They've Jay Powell just spoke on Friday and said no rate move next week. They don't have enough evidence of anything, and by the time they meet next week, who knows what the stock market will be doing? It could be up 120, or 300 points or something. So they will take it into account as part of their overall "we're watching things" mode, but it doesn't really figure in.
Mike, I want you to get a weigh in on whether or not Trump looks at the market today like he did in his first administration, his first term, something Gina was talking about. Is there something to be said with the idea that because of the populism that he has embraced, that his administration has embraced, if the stock market goes down, it's not necessarily a big deal because of who owns the majority of the stocks in the U.S.?
Well, that's a bit of a misnomer. Now, I can't read Donald Trump's mind. I don't think anybody, even him, can read his own mind. So we don't know what he's going to do day to day. There was the idea coming into this administration that there would be a Trump put, which he has so far not exercised and has suggested he'll let things go. But does he really want the market to crash? You got to remember that a lot more people own stocks than we think. I mean, sure, the very wealthy own a lot of stocks, and he's doing a lot to protect the very wealthy these days. But through their 401ks and pension plans and things like that, that also the markets affect the average person.